Good evening, everyone. Today is a beautiful Wednesday, midweek evening. Okay, 30th of October, 2024, 8:30 Malaysia time. Okay, so today we are going to look into the forecast of November 2024. Actually, October is a very exciting month, right? There's a lot of going on. We shall see how exciting it is. The excitement is not has not ended yet. So in November is actually we so-called month of advancement. We shall see that what exactly is advancing. And those who are new in this platform, both PC is actually an investment guru, and then I am a Chinese astrology expert. So we are trying to apply both methods of trend research and Chinese astrology to forecast on economic, financial, and global geopolitical events. That all these events will also impact the trends of investment, the market trends, and also the commodity trends, so enable you to make investment decision. We do not only talk about stock market now. We are not stock market experts. So we talk about commodities. We talk about up the supply chain, what is happening, and then what are the potential things that will enable you to sort of invest in the opportunity is there. That's what we look into as well. Unlike the normal guru is solely hardcore on stock market, and no Chinese astrology tools can really forecast market very accurately. Okay. It's only
Actually,
like
actually, I'm yeah. Actually, I'm not a guru. I'm just someone that is very inquisitive.
yeah. Okay. Yeah, but you have written a lot of books on it, so you are the authority in it also. Okay. Yeah. So there's actually no Chinese astrology tools that can accurately predict market one. It's all 50-50. So 50-50 is leave to chance one. It's either up or down only. This is the disclaimer that we need to make. Okay. But sometimes when the signal is very clear, yes, I can see that it's coming. I will tell our members. Okay. Yeah. Good evening, Christine. Yeah. So today's talk agenda will be an introduction, which we have already done, a disclaimer, a brief recap of last month's forecast, the influence of the five elements energy in the November, what it brings, the November 2024 geopolitical and financial forecast, and also a summary, okay, by both me and PC. So the disclaimer is that the content is really purely based on our study in global trends in Chinese astrology. What you see that how the energies, the movement of planets that impact what the global trends on Earth for you to use as a guideline in your investment decision. If you want to know that how does Chinese astrology that can use to forecast on global trends, you can always visit my YouTube channel. I have a video on that tells you that what are the tools that can be used to forecast on that. So you need to exercise caution in investment, especially now. We know everything is crazy in a volatile situation. So you can do your own research on things that you want to invest. It's always good that you really know what you are investing in. We will not give any stock advice in this platform. Okay, as I will say, we are not really we are not really the so-called financial planner, the financial advisor. So however, for our members, we have some like additional support for them in the Telegram group. Okay. And okay, this is actually PC and I. We have also written a book called Unlock Your Wealth Potential, which is also available for sale. Actually, it was in the bookshop. Now it's available online at Shopee and Lazada. Okay, so we have actually achieved about 80% accuracy to help our members in making a profitable investment. Okay, I think most of our members are here tonight. They can attest for it, that give me some, members, give me some support, that how do you find our platform? Give me If you find that we have done a good job in growing our portfolio, can in the chat. Oh, yes. Thank you very much, Vincent. Thank you very much, Mitra. Yeah. If you have listened to us, some of the things that we recommended, so I think it is quite this one. I think most of the things are quite okay lah. Okay. Although we are not 100%, but at least we do our due diligence in doing a lot of research. You can see every day PC has shared a lot of things with us in the Telegram. Okay, whatever that he knows, he's not stingy one. He everything that he knows, he will share. Okay. Yeah, so we will recap on month of October 2024, what's happening. So we know, right? We have wood and wood on the surface looks like quite good lah. Okay, so it's like in Chinese we say that 风平浪静. Okay, in a way, but actually down here when slowly you progress into the month, because the beginning of the month seems to be okay ma. So as you progress through the month, then you will see the dog and the dragon clash together, because actually um dragon is a water storage and dog is a fire storage. So when these two clash, although earth and earth seems to be okay on the surface, but internally actually they have a lot of clashes. The elements are all the hidden elements are all clashing each other. Okay, so it's a very big clash when you have earth and earth clash because they both store a lot of energy ma. So once you have, earth and earth clash, they will have, a lot of energy being clashed out, and a lot of crazy things will happen. Okay, like weather and all this. Later we'll look at it. Okay. So I point to potential southeast disasters. I think luckily it does not happen. Okay. And this is one thing good about it. And I point also out to war that could happen in multiple regions where now we have seen escalations of wars, especially in the Middle East. Right. Iran and also Israel is starting the war to this one, initiating an attack. Then there seems to be collaboration within government because Chia is actually the officer of this year. So it also represents government. So internally, there's a lot of problem and escalation of geopolitical conflicts and internal political strife, because we have a lot of elections in multiple nations as well that is going on from everywhere, because this year I think we have over hundreds of countries. 70% of the earth nations are going undergoing elections. Okay, so it's a
Uh,
it's a transformation
yeah,
year. Go ahead,
Evelyn, if I
PC.
may interject, I
Mm,
think the biggest collaboration that we witnessed in in October was actually the BRICS summit,
mm,
where I think thirty countries and 50 over representatives from the global south actually attended the BRICS summit in Kazan, Russia. So
mm.
I think that's the biggest collaboration event that we have witnessed in October.
Okay. Yes, thanks. Yeah, it was also in my deck as well. So, yeah, we look at the natural disasters and we can see that heat waves, cyclones, means winds, because of the, I think, Zhengguo in the Middle Palace also. So you can see crazy things that's going on. Zhengguo means that wind also lah. Okay. So, and hurricanes that happening in multiple regions of US. It could be because they're targeting US. As I say, because you remember that earlier this year in April, right? In April there was an eclipse, a full eclipse of solar eclipse that happens in US. So after that, I always says that after the eclipse, maybe things that it will not go so well. So this could be also the after effects that is also happening. And also military conflict, as we know, okay, where Israel is, is having initiating a attack in the region as well. I saw BC also posted in our Telegram group, and also Sudan. I think Sudan, the war also has escalated quite substantially, but they get their support actually from the Eastern Bloc. People like Russia and also China, they also stationed as troops in Sudan as well. Sudan is actually a very resource-rich country. The Ukraine and Russia war is still ongoing, right, BC?
Actually, correction, yeah. Sudan, there is Russia presence, but China not. China only
China.
have one military base, and that is in Djibouti.
Okay.
Yeah.
Okay. Okay.
But
Yeah.
Russia is very active in Africa through the mercenary group, the Wagner group.
Okay. Okay. Because actually Africa is a very rich resource nations.
Yeah. But China is actually in Africa for development,
Mm.
not in military sense, but they are actually in the helping with the development. But recently, there has been a lot of call because a lot of Chinese engineers are being targeted, yeah, and through suicide bombing, especially in Pakistan and
Oh.
also some parts of Africa.
Mm.
The Chinese engineers are being targeted. There's been a lot of call right now for China to establish a private military group, similar like the Wagner Group and the U.S. Blackwater.
Mm. I
So that
believe
may
so.
happen. Yeah.
Yeah, I believe it will happen because they also have the resources to do so. So yeah, the Russia and Ukraine war is still ongoing, right? BC?
Yes, yes. In fact, Russia has made a lot of advancement into the Ukraine territories, and a lot of the Ukraine army is now being uh, depleted, and they are
Mm.
right now any man, regardless of any man regardless of age, as long as they can walk, even though with a walking stick, they are sent to the front lines.
Oh, okay. Okay.
So
So yeah.
their entire generation of young men has already been massacred, you can put it that way,
Ah, poor
because
thing.
the
Yeah.
casualties right now is actually closer to 1 million.
Yeah. Oh, just imagine how many lives are been, lost during the
Yeah.
war. Yeah, it's too bad lah. Okay, and that's why in Chinese we have 孙子 war. War really, initiating war will be always the last resort one in the
Yeah.
Chinese philosophy. Okay, so we have
Yeah.
also collaboration of government. BC just says the BRICS that's going on. Okay, even Malaysia is also wanting to join BRICS. I added already, right?
They are now right now they are partners to BRICS. I think BRICS, they do not want to extend the membership as yet because there are still some internal disagreement.
Mm,
Um, with regard to the adoption of a common payment platform. So I think they will need to iron it among themselves before
mm,
they expand it outwards. But later
mm.
I'll talk a bit about that.
Yeah, I
About
saw that.
the yeah.
Mm. Yeah, that's right. Because we also predicted there will be new currencies replacement in period nine. So it's speculated lah. Some Chinese metaphysics guru also speculated it could be BRICS, but I do not know. Okay. Okay. So in the month, let's go through the month November 2024 energy. Okay. What you can see is that is actually a Yi higher pillar. Okay, this pillar means that this actually dragon is actually a self-punish energy. The pig is also is a self-punish animal. So it could have a lot of self-punishment energy that could cause leaders that will make policies potentially cause more damage to the present situations. This is what is predicted. Yes, whatever decision is made with the policy, it will create an outcome. In the month of November. So in the month of in the month of November, let me just exit this. Okay, this one should be November. So it's actually uh, okay. So in the month of November, the hexagram is number 35, is advancement. Last month was obstruction. So this month is advancement. Advancement means that this is actually fire over the earth here. So it's recognition that everything is on surface because the fire you can see already and the earth is open for the fire to go up. So there will be accelerated. Once again, the elements of fire also represent like technology. So there will be accelerated development in technology, maybe in AI. In fact, you can see the Nobel Prize winner for in this October that comes up is also AI related. Two of them in physics and in chemistry. One in physics, one is actually the neural network, pioneer work that is the backbone of AIs. And then in chemistry, they are also scientists using AI to help synthesizing complex proteins, which is not able to do with normal human this one, which AI can do it faster and they will lead to development of more advanced medicine, okay, in the progress of medicine. So that's why these two teams they are awarded in Nobel Prize. So and also in rapid growth economic development that could excavate like income inequalities and then maybe advancement that jobs displacement. I think a lot of I now the job market is quite challenging also. Okay. And this earth comes up with the fire potentially because this is just an image. Like the other day we talked about sinkhole, right? Sinkhole is that water over earth, right? So it also happens. So this one potentially there will be some like volcano eruption or fire related incidents that could be seen also. Sometimes the itching the hexagram of the mana could tell us that something is that is going on. We have gone through like I think more than 24. Today is 28 episode already. Most of the time that it comes out that it correlates to the happenings of the month. Okay. And okay, we talk about this already. We are in the sixth line already. So we will have election, US election in November. So we will shall see after the election what exactly happens, who will win. We have already done a sort of a prediction in our, I think in our August or September talk, right? Where our member requests me to do a prediction on US election. Okay? So yeah. So over to you, PC, for the October.
Yeah,
What exactly happened? You want to share your own deck?
yeah, yeah.
Okay. Yeah.
Um, we in October we actually predicted some of the events. Okay. For example, in US, we expected the US dollar to weaken after the Fed turned dovish, but the rise in US Treasury yields have resulted in a stronger US dollar. So the rise in US Treasury yields signal a policy mistake by the Fed. So we because when the Fed made the announcement, they were predicting continual interest rate cuts all through 2026. But it seems that after the cut, uh, investors investors of U.S. Treasury decided to dump the U.S. Treasury instead, forcing the yield higher. And this has a lot to do with the U.S. debt situation because right now the U.S. debt is approaching 36 trillion. And according to Janet Yellen's most recent prediction, by the second half of June 2025, the US would have to add another 1.6 trillion in debt. So that's why investors are very nervous about the US debt situation and they are dumping US Treasury. More so, those central banks from the BRICS nations, a number of them are actually selling treasuries to buy gold. And since then, the US Treasury yield, the 10-year US Treasury yield, which is often used to gauge the inflation situation in the US, have risen 12.8%, while the DXY or the dollar index has risen 3.4%. So this is something which we predicted but did not happen. Then we also shared with the audience that the BRICS unit will be announced due to numerous sources of news, and other media are reporting that chances are high that the BRICS unit, which will be 40% backed by gold, will be announced at the BRICS summit in Kazan, but it did not happen. So obviously, there were a lot of disagreeing parties for a common currency, but that did not mean that the common currency project is dead. Later, when I share a bit about the BRICS summit, you will have a better idea. But President Putin did provide a teaser by revealing a mock-up of the BRICS currency note. Now, this note is just a mock-up, okay? It's not the confirmed BRICS currency. So, but where we got right, now we highlighted the risk of small and medium banks caused by the CRE crisis due to the massive losses in bonds. So the First National Bank of Lindsay, Oklahoma collapsed on 22nd of October. And the FDIC found the bank deceptively hiding the depletion of its capital. And First Citizen Bank shares fell 9.7% after reporting its Q3 earnings, which also fell 9.7%. And the number of houses put on sale in the US increased from 909,000 in August to 940,000 in September. So that means that a lot of households now are getting nervous because of their huge debt burden. And they are right now looking to exit their home equity so that they can use it to settle their debt. And we said that the global central banks will continue to add liquidity to offset the gloomy economic picture, and this will support the stock market. So even though a lot of our presentation, we talk about the risk in the US, but we also said that due to the liquidity increase, there will be some support for the market. And true enough, in October, the S&P reached a new record high. So this is a chart showing all the major central bank money supply has been increasing. And that will at least provide some support to the stock market. So gold and silver rose as bullion banks lost control of the market. And based on my most recent findings, the bullion banks are actually facing a paper loss of close to 68 billion in the gold futures market and about 7 billion in the silver futures market. So in Europe, EU area PMI for manufacturing remains in contraction at 45.9, even though it rose 0.09 percentage points in October, while the PMI for services edged lower by 0.02 percentage points to 51.2. The EU area PMI manufacturing has been in contraction for more than 2 years, reaffirming our thesis that Europe, the industrialization is here to stay. And as predicted, the ECB cut interest rate by 25 basis points on 17 October. So EU and China continue to hold negotiations, even though EU announced new tariffs on Chinese EV. But the news that I got this morning is that nothing came into agreement, and Chinese authorities quickly retaliated by imposing tariffs on French luxury goods, of which the French government protested. But then again, you know, they were the ones who actually lobbied to have tariff increase on Chinese electric vehicles. So in terms of Europe, we predicted that there will be criticism being directed against the EU for its economic woes. And here is a publication from Bloomberg stating that a divided Europe hits tipping point over economic woes. And we said that governments will become more draconian against anti-government parties. Here in Germany, calls grow in Germany to ban the far-right AfD party. And in China, we said that the PBOC monitoring easing and government stimulus will cause an immediate impact on the Chinese stock market. So Hang Seng Index gained 8.6% since September 24th. Shanghai Composite Index gained 16%. Shenzhen Composite Index gained 26%. So mainland Chinese indices have outperformed the Hang Seng Index. Generally, home sales in many cities in China have seen triple-digit rise. The October data to be released in November will confirm this. In fact, the major cities in Beijing recorded triple-digit sales in some projects, as well as those in Shanghai, as well as Shenzhen, if I'm not wrong. So China continues to achieve new breakthroughs in technology. As we highlighted, Xiaomi successfully tapped out a 3-nanometer chip. JFS Laboratory was able to light up a laser light source integrated with a silicon-based chip. The world's most powerful floating offshore wind turbine with a generating capacity of 20 megawatt was rolled off the production line in Yancheng City. And Chinese scientists have made some breaks using simulated lunar soil, among others. So despite the economic challenges, China exports grew 2.8% in September. So if we look at the US economic indicators, CPI rose 0.2% month-on-month in September. Year-on-year, it grew 2.4%, down from 2.5% in August. Core CPI rose 0.3% month-on-month in September. Year-on-year, it grew 3.3%, down from 1.9% in August.
If you find this video informative, please give it a thumbs up and consider subscribing to my channel for more valuable insights and updates. By subscribing, you will be the first to know when I post new content.
Retail sales rose 0.4% month-on-month in August. Year-on-year, it gained 1.7%. Net retail sales less CPI was 0.7% negative. So normally, I use net retail sales as a comparison because the retail sales growth sometimes can be masked by inflation. So one of the way is to use the CPI to offset the sales, then for you to realize that a lot of the increase could be driven by inflation rather than in the quantity of goods purchased. So industrial production fell 0.4% month-on-month in September. Year-on-year, it fell 0.5%, down from 0% in August. The NAHB index came in at 43 in October, up from 41 in September. Now, anything below 50 is deemed a contraction. And the NAHB index is actually the National Association of Home Builders. That means that the confidence in the construction industry is not strong. So housing starts fell 0.5% month-on-month in September, while housing permits fell 2.9%. Existing home sales fell 1.0% month-on-month in September. Year-on-year, it fell 3.5%. If you look at the number of rates here, is an indication that the US economy is weak. So new home sales rose 4.1% month-on-month in September. Year-on-year, it rose 6.3%. And new home sales rose in September because after the Fed cut interest rate, the interest rates dropped. But October will be another story because I read somewhere that the interest rate for mortgages have risen back above 7%. So a lot of people were buying during the when interest rate was low in September, but with October going up, the home affordability will continue to drop. So durable goods orders fell 0.8% month-on-month in September. Year-on-year, it fell 2.9%. October preliminary PMI manufacturing came in at 47.8, while PMI for services came in at 55.3. So manufacturing in the US remains very weak, and services remain in expansion. Now, services, of course, because services are those that are very related to finance. So if, let's say, the stock market is doing very well, then the services naturally will also be doing well because it involves a wider sector of the financial sector. So the leading economic indicators, the Conference Board Leading Economic Index, or LEI, declined by 0.5% month-on-month in September, following a 0.3% decline in August. Over the 6-month period between March and September, the LEI fell by 2.6%, more than its 2.2% decline over the previous 6 months. So if we look at it, normally when the LEI moves downwards, then chances are it will herald a recession, okay, like what happened here, here, and here. So right now, during this period when it was going down, there were a lot of expectation that there will be a recession. But with the amount of debt that the US infused into the economy, it sort of helped the LEI to move back up, but right now it's falling back down again. So similarly, it happened in the 2006 to 2007. Seemingly, it went up where people thought that they have avoided recession, then it plunged. So are we going to see a further downside here? And that is one of the things that you can actually look at on a monthly basis to see whether it continue to move down. If let's say it moves down, then chances are that a recession being around the corner will be much higher. So going back to the real estate market, Americans just cannot afford to buy a home. According to Lambert, a borrower's income would have needed to rise by over 86% since January 2020 to keep pace with the increase in cost of owning a medium price home. You can see that the price of home has actually increased, whereas the US median household income has not been increasing in tandem, whereas during the period here, it seems to commensurate, okay, that the median household income with the house price. So as highlighted earlier, more Americans are putting their homes up for sale due to unsustainable debt. Now, last month in our presentation, we shared that the US household debt have already reached a new record high, and more disturbing news are coming out that households are actually rolling their credit card debt to the following month because they just cannot pay their interest payment as well as paying off the principal which they loaned. So these are indications that there's a lot of how shall I put it? There's a lot of events that are out of sync actually. Okay, like the economy, they say is doing very well, but then it's done through infusion of debt. And they say that home prices are moving to new records, but then people cannot afford to buy. So these are all types of things that doesn't correlate with each other, and that is a market that is very confused. So here is what I mean, okay, that the credit card interest have actually hit a new record high. Okay, a record of 628 billion in credit card debt is being rolled over or unpaid by US citizens every month. In the past 3 years, these recurring balances have risen by 52%. Okay, this is credit to Mike Investing, who posted the news online. So here we say that the Fed is having a policy error because the market is pricing in a policy error by the Fed. Inflation remains sticky, and this will increase the unrealized losses in banks just as the following become due. Big CRE loans are coming due. US banks are sitting on 750 billion in losses on real estate debt securities, and estimated 750 billion is roughly 7 times more than banks held in 2008. So you can see that when the treasury yield goes up, a lot of the banks are holding US Treasury as assets. So when the yield goes up, it means the value of the bonds decreases. So that is why banks are sitting at unrealized losses in bonds, which amounted to 512 billion at the end of September. But on top of that, US banks are sitting at 750 billion losses in real estate debt related securities. So all in all, they are in the water for more than 1 trillion. And here, highest bankruptcies in 40 years outside of the pandemic. This is the amount of US major corporations that have gone into bankruptcy. Okay, so if we ignore the pandemic, but it's very close. Pandemic during the same period is 518 bankruptcies, whereas right now is 512. In the so-called US economy is experiencing high growth, okay? But the number of bankruptcies keep on increasing. So that goes to show you that whatever they talk about the US GDP, it has nothing to do with the real economy because it is all done through the issuance of debt. Okay, and that's why US public debt or government debt is now closer to 36 trillion. So what will happen in November? We will enter a period of unpredictability in November due to the following: the outcome of the US presidential elections. While Trump is expected to win in a landslide, there is also the prospect that the Republican leadership and base may vote the Democratic Party due to recent suggestions that Trump is unhinged. Now, there's a lot of news floating that Trump is entering the early stage of dementia. Okay, and the last rally at Madison Square, there were a lot of people condemning the rally because of its racist attitude. So we shall see, okay? But chances of Trump winning right now in terms of the polls, Trump is leading by 60%. But there were also reports that the polls that are being reported on the media are due to many billionaires who are backing Trump paying for the polls. So we shall see. Okay, in fact, the US election is like entertainment, Hollywood entertainment. Okay, not
Very
short of
dramatic.
yeah, not short of mudslinging, not short of calling names and such. So that is very unbecoming of leaders actually calling each other names. So either party winning will likely result in chaos because ever since I think the Obama presidency, there has been no collaboration between the Republican Party and the Democratic Party to solve domestic problems. But they are always in agreement when they condemn China or Russia or when they spend on military. Okay, so that's the US. Agreement only in these 3 areas. So after the 50 BPS cut by the Fed, US Treasury yields have risen, suggesting that the Fed made a policy error similar to what the Fed did in 1974, which led to a period of high inflation. Just make a correction here. Okay, should the Fed walk back on its interest rate cuts, then we could see a stock market sell-off as bank losses mount. So the Fed actually have to resolve the crisis that the banks are right now facing. So we could see a surprise move by the Fed, which include a deeper rate cut, including a QE, but not QE statement to save the banks. Now, this could weaken the US dollar, but propel the stock market higher. So the Fed right now is hovering on these two decisions because inflation is still high, core inflation is still high, okay, and the people are selling US treasuries despite the Fed cutting interest rate. So if the Fed wants to save the banks, then it has to do QE. Whether it's in November or not, we will not be certain. And I think the Fed will actually make a decision over the course of next week or the week after next. I haven't checked that yet. So whatever the outcome, I believe we could see a similar price action in precious metals and come to 1980. What happened in 1974? The Fed raised rates, then cut rates, and then there was a super inflation from 1974 to 1980, and gold price from 1974 to 1980, if I'm not wrong, went up 10x.
Exciting news! We've just released the 2025 Wood Snake Year Astrology and Global Trends Forecast. This is your ultimate guide to navigating the complex year ahead. Inside, you'll discover powerful insights on global economic, geopolitical, and financial trends, helping you make smart, informed decisions. Whether you're looking to capitalize on new opportunities or protect your investments, this book has got you covered. Ready to get a head start on 2025? Click the link below to download a free chapter now. Want the book for free? Here's how. Join our membership at the comprehensive or premium level, and you'll receive the 2025 forecast as a complimentary gift. Simply purchase the book using the link provided, then submit your receipt to offset the 50 ringgit membership fee. With membership, you'll not only get the book, but also enjoy early monthly forecast full recordings, presentation slides, exclusive talks on astrology and trends, and much more. Choose your plan and start your journey toward financial foresight. Buying the book is simple. Just head over to our ebook store link, add the book to your cart, and complete your purchase. Be sure to save your receipt, as you'll need it to apply for your membership fee discount. Take the first step toward a successful 2025 by securing your copy today. Ready to join our Astrology and Global Trends community? Complete your membership registration using the link below. Attach your book purchase receipt if you're claiming the 50 ringgit discount, and unlock access to our exclusive resources and forecasts. Let's make 2025 your most prosperous year yet. As a premium member, you'll receive our detailed weekly report, a 10-page package packed with valuable market insights, precious metals updates, and global news analysis. Plus, you'll get strategic Shimen directions every week to enhance your planning and decision-making. This report is designed to give you the edge in today's fast-changing world. Don't just take our word for it. See what our members have to say. Their feedback highlights the value and impact of our astrology and global trends forecasts. Join our community and experience these benefits firsthand. With insights that empower, you'll gain clarity and confidence for the year ahead.
So flight to safety will be paramount due to the toxic political climate and global uncertainties. So the Euro area CPI came in at 1.74%. year-on-year in September, down from 2.2% in August. UK CPI came in at 1.7% year-on-year in September, down from 2.2% in August. Euro area retail sales came in at 0.8% year-on-year in August, up from negative 0.1% in July. UK retail sales came in at 3.9% year-on-year in September, up 2.3% in August. So the UK economy is outperforming the Euro area. German manufacturing PMI came in at 42.6 in October versus 43.5 in September. Okay. Sorry, some correction here. German manufacturing PMI came in at 42.6 in October versus 40.6 in September, while services PMI came in at 51.4 versus 50.6 a month ago. France manufacturing PMI came in at 44.5 in October versus 44.6 in September, while services PMI came in at 48.3 versus 49 a month 49.6 a month ago. UK manufacturing PMI came in at 50.3 in October versus 51.5 in September, while the services PMI came in at 51.8 versus 52.4 a month ago. So you can see that France is underperforming both the UK and Germany. And herein lies some problem with the French economy. Moody cut France credit outlook to negative from stable, citing fiscal deterioration. Debt rating was affirmed at A2. So this is the French 10-year bond yield. You can see that the yield has gone up because the fiscal policy of the finance situation of the French government doesn't look good. And because of the downgrade, the credit default swap has been going up. And in Germany, it is deindustrializing at record speed. These charts are from Van Norton. Volkswagen announced closure of 3 auto plants. So you can see that the German deindustrialization is gathering pace. Now, we can ignore this, but this was due to the closure of many plants during the pandemic. But these are the real economy that has failed to take off, but right now are declining. Okay, you can see that the German industrial production is trending down. Okay, if we look at it when compared to intermediate goods, capital goods, consumer goods, and energy. Okay, so a lot of it is due to shooting itself in the foot. Okay, because the Nord Stream still have one functioning pipeline, but they still do not want to use, and they prefer to import refined gas from the US, refined crude oil from India, okay, and also from the US, which is more expensive. So Europe, what could happen in November? France government could face financial turmoil if the bond yields keep rising. France also faces a shortage of natural resources to fuel its industrial base as former colonies shun the country. A number of countries in West Africa, which were former French colonies, they are asking the French producers of resources to get out of the country, especially in Niger, if I remember correctly, which is a major producer of uranium, contributing about 4% to global output. Germany's rapid deindustrialization could see more political turmoil as income inequality widens and unemployment surges. UK continues to face widespread protests due to dissatisfaction with the Labour government, and the government faces a £22 billion gap in public finances. So again, you see that UK economy could be doing well because again, it's pumping, money, okay, through that infusion. And right now they face a 22 billion gap in financing. So stall in talks between EU and China will see counter tariffs being imposed on EU products. Europe is severely weakened economically and politically, and eventually it will be financially. So where China is concerned, CPI unchanged month-on-month in September. Year-on-year, it grew 0.4%, down from 0.6% in August. So China's CPI is actually trending on the low end. Core CPI rose 0.1% year-on-year in September, down from 0.3% in August. PPI came in at negative 2.8% year-on-year in September, down from negative 1.8% in August. So PPI fell even deeper in negative territory. Retail sales climbed 3.2% year-on-year in September, up from 2.1% in August. Industrial production went up 5.4% year-on-year in September, up from 4.5% in August. Services output went up 5.1% year-on-year in September, up from 4.6% in August. So you can see that When August was the period where a lot of the indicators were steeply down, and therefore throughout September, there were a lot of policy announcements. And in October, these policies will be strengthened further. And in November, there will be more stimulus. So fixed asset investment went up 3.4% year on year from January to September, unchanged from the period from January to August. China goods trade volume expanded by 5.3% year on year in renminbi terms in the first 3 quarters versus 6% expansion in the first 8 months of the year. So this seems that the goods trade volume has gone down in comparatively, okay, in the first 9 months versus the first 8 months. But this is also because a lot of economies, especially in Europe, are seeing stagnation or decline, and therefore the imports of goods from China could be seeing a slowdown as well. So the goods trade volume expanded 32.33 trillion or US 4.57 trillion in the January to September period, reaching a new high. In comparison, goods trade volume in USD stood at 4.02 trillion from January to August. So although the pace of growth has slowed down, but then it's still in record territory. Export rose 6.2% year on year to 18.62 trillion renminbi, while imports climbed 4.1% to 13.71 trillion in the first 3 quarters, delivering a surplus of 4.91 trillion renminbi. Now, this is based on goods only. We have not come up with the services. The services report has not come out. Normally, China would actually have a few 100 billion
BC, you're breaking down again.
Trade surplus per month. So yeah,
maybe you
I
off
think
your camera.
Okay.
Yeah, it will be better, the bandwidth.
Okay. So so as I mentioned, export rose 6.2% year on year to 18.62 trillion. Imports climbed 4.1% to 13.71 trillion, and delivering a surplus of 4.91 trillion. So in September, the country's first-tier cities, namely Beijing, Shanghai, Guangzhou, and Shenzhen, new home prices edged down 0.5%, and compared with negative 0.3% drop in the previous month. So the decline in home prices have actually gone deeper. Second and third tier cities both registered declines of 0.7% month on month. So if we look at since the implementation of the restriction of financing to control the rapid rise in home prices in 2021, leading to the implosion of Evergrande, I think Chinese homes have actually declined in prices ranging from 30 to 40%. So I believe that the government right now feels that it's time to provide additional support to the real estate market, because along with the decline is affecting China's heavy industries, such as those in the steel industry, cement industry, and also in the building materials industry, besides the normal casualties like developers and construction companies. So prices of second-hand homes fell 1.2% month on month in the first-tier cities and 0.9% in second-tier and third-tier cities. The average survey urban unemployment rate rose 5.1% in September, down from 5.3% in August. Generally, real estate purchases have increased substantially in August across major cities after the PBOC cut the RRR or reserve requirement ratio and LPR, which is the loan prime rate. And here is a publication for SCMP on 28 October. China property market show signs of recovery as deals surge in top cities. So there are some new economic policies, and I will want to share with you here. China's major national commercial banks have started to implement the mortgage rate adjustment plans announced earlier this month to bolster confidence in the property sector, which is showing recovering momentum amid a raft of favorable policies. The mortgage rates for first homes, second homes, and more have been reduced to 30 bps below the loan prime rate. The reduction, affecting 90% of existing mortgage loans, is expected to save borrowers 150 billion renminbi and benefit 50 million households. So what they will do is that with this saved in the mortgages, hopefully they will actually help to increase their consumption. So China will launch a month-long campaign to promote consumption in November as part of its efforts to bolster consumer spending. The Consumption Promotion Month will kick off next month in major cities, featuring a series of activities promoting consumption in shopping, catering, tourism, exhibition, and performances, among others, to foster continuous recovery on the country's consumer market. China will support capable private enterprises in leading national initiatives to make breakthroughs in major technologies and provide private enterprises with greater access to major national scientific research infrastructure. The country will also support basic research in diversified fields and guide eligible private enterprises to conduct high-risk and high-reward basic research. So China is dumping a lot of money in technology, and that's why recently we see a lot of breakthroughs in the Chinese technology sphere. And if you read our book for next year, I also listed down some of China's leading technology breakthroughs. In fact, China right now holds the largest patent on AI compared to the rest of the world, according to the World Intellectual Property publication. Okay, and out of the top 10 universities in technology, China leads by having 7 of them. Okay, so what could happen to China in November? The National People's Congress will convene from 4 to 8 November. Speculation is rife that 1.4 trillion US dollar or 10 trillion stimulus will be approved. A huge sum will be dedicated to the real estate, property developers, construction companies, steel and concrete producers, and building material suppliers will benefit. Property casualty, insurance, and reinsurance will also benefit. The policy to boost consumption and trade for smart electronics will boost the earnings for major consumer electronics brands. So China has provided additional incentives to increase childbirth. This could benefit industries that provide products for the infants, such as dairy, napkins, prams, etc. The penetration rate of new energy vehicles, a gauge of popularity in the domestic market, climbed to 53.3% in September. This figure will continue to increase substantially in coming years, and it will be bullish for batteries and EV makers. Inflation in China will likely pick up because of all the massive stimulus. Now let's talk a bit about gold and silver. Gold closed at another record high on 29 October. Silver remains suppressed. According to Yahoo News, the 5 US banks are sitting on massive losses in shorting silver. According to Bai Xiaojun, a gold analyst from China, China Gold Association released a report stating that the consumption of gold bars and coins in China from January to September was 282.721 tons, a year-on-year increase of 27.14%. The gold ETF increased by 48.69% compared to the end of 2023, while imported gold concentrate increased by 15.51%. So Chinese, no matter where they are, continue to hoard gold. Okay, there were a lot of people buying gold, but it has still not reached a frenzy. And I think when the Chinese really reach a frenzy, if they start converting their savings into gold, then it will be a major boost to the gold price. Because right now, Chinese savings amounts to 20.2 trillion US dollars as of the end of June 2024. So if you imagine just 5% of it that goes into gold, where the market value is just a few trillion, you have, 5% is more than a trillion, going into a few trillion market, that will actually be tens of percentages higher, and that could force the price of gold much higher. But the Chinese, they have still not converted their savings into gold yet. Okay, they are, but the government right now is trying to push the Chinese to consume, and that is why they are lowering the deposit interest rates. So China is importing silver concentrate from South America instead of directly purchasing silver ingots from the COMEX or LBMA. So the COMEX and LBMA are partners in crime in the suppression of the price of silver. So right now, China is saying, I'm buying directly the silver from the miners themselves, okay, because we have access to the ports. And that will actually pull the physical supply to the COMEX and LBMA. Okay, South American countries have currency swap agreements with China, thus avoiding the US dollar and reducing the cost of obtaining silver. So behind the scenes, China is actually buying ingots from the miners themselves. Okay, and that would lead to a lack of physical in the market. So in terms of geopolitics, the Russian army continues to advance, could see NATO approving long-distance strikes on Russia, and Russia will expand westward, claiming more territories. Middle East conflict will remain intense. Much depends on how the new US president tackles the issues. Okay, so on one hand, Trump is saying it's good that Israel should attack Iran's nuclear sites, and the other is that trouble is brewing in Georgia and plans for regime change is afoot. The president refused to accept the election results and encouraged the people to rise up. So, BRICS Summit, the widely speculated announcement of the 40% gold-backed unit did not occur. Rather, the focus was establishing more trade platforms to facilitate trade in national currencies. And the BIS may pull the plug on the Enbridge due to the threat it poses to the US dollar. And this is a report that came out yesterday. BIS debates ending cross-border CBDC project Enbridge. So we will be posting a summary of the BRICS Summit for the members Telegram channel, so look out for it.
We have already published our book on 2025 Astrology and Global Trends. This is the third book that we have. We already started the Astrology and Global Trend Forecast book since 2023, the year of Water Rabbit. Okay. And we also, last month we have given a promotion where we allowed people to download our 2024 book. We for complimentary free, that you can have a look, check on our forecast to see how accurate our forecast will in 2024, that everything that we have forecasted, I think almost 80% of the things has already taken place, that conflicts, inflation, and all this that's going on. Okay. And also which industries that will be doing well is also in that book. Okay. So we have talked about, so now let's look at 2025, what to expect, in global geopolitical, economic, financial trends, that to help you capitalize on the opportunities and also mitigate threats in your investment as well. Okay, so we have done, as usual, we will use dual forecasting approaches, in-depth sector analysis, and then from there you can look at what are the investment opportunities and view and identify 2025 challenges. You can actually download the free chapter now and get and get a something head start, that to know that what is going on there. Okay, so on PC you can drop the free chapter for our audience to download, to check out itself, that if you like the book you can buy the book. Actually, okay, download the link where they can get the book as well. Actually, in the free chapter, the book, if you download it, then you can also see the link where to buy the book as well. Okay, so if you are interested, anyone that is interested to get this book free or not, can give me a 2 if you are interested to get the book free? Okay. Thanks, Jeremy. So yeah, you can actually get the book free if you want to, through our membership. Yeah, thanks, Link. Yeah, interested. So you actually can get this book for free. If you join our comprehensive membership, we also open our Astrology and Global Trends 2025 membership today. Okay, so we have 3 package now. For you to choose, you can start as low as 149 ringgit per the whole year, 12 months, where you will have early access to our monthly forecast full recording. The one that I put in the YouTube sometimes is already edited. Some of the important things that I have take up the contents, like like it's not, sometimes it's not full, or sometimes it's full. Okay, so and then the presentation slides, and also you can join our 2025 Astrology and Global Trends talk as well. We have the annual talk that where we share more, and then we also recommend some ETF and all these things. Sometimes I'm busy, he will recommend that. So this is a starter pack. You don't have to buy the book for this one, but it's 149 ringgit. If you if you add up another 50 ringgit. You can get the book for free. You get everything, and you get the Telegram group channel for discussion. Okay, like what our members are enjoying today. However, the catch is that you will need to buy the book in a platform. We will give you the link and the instruction to buy the book. Okay, and after that you go to a Google form, and then shows that you have already bought the book, and our price in the Google form is actually minus off, offset the 50 ringgit that you have paid. It's more or less 50 ringgit for the book. Okay, so the comprehensive membership is actually 209. And if you have friends, and this is for all the new members, I think the existing member one, you already have your own link in the Telegram channel. So the actual payment is 159 plus the book payment. Or if you have friends, we will give you further discount. That means if you and you bring in another friends, both of you will enjoy the rate of 179 per year. Okay, so that means it is the actual payment will be 129 plus 50 ringgit where you have to buy the book. Both of you have to buy the book and then put it in the in the form to shows that you have buy the book. So this is the comprehensive membership. Okay, where you get the book free. And then another tier is we have premium membership also. It costs 329 per year. And if you have a friends that comes in, is only 229 per year. Okay. So you will have everything, early access to monthly recording, presentation slides, 2025 Astrology and Global Trends Talk, access to our Telegram group channel, the book on 2025 forecast, and then PC's weekly market insights. We will show you the report later. And then I will give you a weekly 3 victory achievement direction. If you know what is 3 victory, these dates are very difficult to find, but it's very useful. Is that you can use it to do your investment. This 3 victory, this is what I use also. That means on Saturdays, certain times, if there's a 3 victory palace, then I will use it to do my investment. For those that are in Chinese metaphysics, you will know what it is. Okay. And also I will give you a Chiman daily deity direction, like for those nobility or what so-called the chief, the six harmony, all this. So it's daily that where they are located. So this is also in together with the weekly report as well. But this one I will give you like one whole month, and that means 1 month you will get it in the one of the weekly reports. And also if you are a new members, we have welcome gift for our new members from the comprehensive and the premium package, where we will share a list of high dividend yield share dividend high dividend yield share. That means maybe it's about, at least it's above 5%, right? 6% like this BC, right?
Yeah.
Yeah, okay. Until up to 10%. Okay, we have this type of list one. We have already shared For the existing vendor, you already know we have already shared in the Telegram group earlier on, a few months ago already. Okay. So yeah, um, this is what our member says about us, that this is game changing in terms of global trends and investment, that we combine these two methodology to have a more accurate forecast. Because every time if you look at our forecast, when I use astrology and PC use global trends, we are more or less correlated 99% of the time. Okay. Sometimes when you see, I'm the one that always, come up with the slide first on our process, the background process is like this. When when it's ready for us to do the talk already at the end of the month, we will look at the whole month's energy. And what we will do is that I will come up with the forecasting part using astrology, and PC will look at from the global trends where he need to focus. And sometimes we can have a little bit of disagreement, then he will look further whether he will ask me first. Then after that, I say, yeah, this is the signal, very clear one. Cannot run away. Then he will go, and this one, like for example, like last year in September, I said gold will go down. So it's against the trend, but truly and surely the gold goes down. Like this year September, I said gold will go up. Truly and surely the gold goes up also. Okay, gold I can at least predict, more more accurate in terms of this one. Yeah. So this is from our student Maestro Astro. He's from Singapore. He is also a very strong supporter of our platform, and of course David also is a strong supporter. That what we have done is that we really look at all the research, the news, and then we see what is accurately really reflecting the actual situation, because nowadays the mainstream media news sometimes it can be distorted as well. Okay, it can be distorted as well. So what we do is that, especially PC, he will look at a lot of news from also from social media as well, that will give you the competitive advantage of identify the lucrative investment prospects. Okay. Then yeah. So this one is the form. When you go into the form, you will scroll down, will come to this. So you have to choose one. If you are with friends, you have to put in who your friend's name is and the email. And your friends also have to fill in the same form. Then I shall look at it, where you entitled for a special of a special promotion. Okay. Then you have to put in I give you the link to purchase the book. Then you have to add the file after you have to purchase, to show the proof of purchase as well. Okay, so this is the Google Form link. I'm busy. Have you dropped the link already? I given you
Yeah,
in the
yeah,
email. Yeah,
yeah. I already dropped it.
yeah.
Yeah.
Okay, okay, good. So this is what happens, and yeah, this is the weekly report options. Maybe I'm busy. You can also introduce your report.
Yeah, the report basically give an insight of what happened to the US market, weekly wrap up for the Dow, S&P, and Nasdaq. Then I will share whatever key economic indicators or important economic news and update on Fed actions. Okay, and we will also have the China Market Insight, weekly wrap up of the Hang Seng Index, and key economic indicators and economic news and update of policies. Now, the Chinese policies have been very, very instrumental in indicating why some stocks will actually perform better. And in the weekly report, sometimes I will add what are the stocks to look at. So then we also have the precious market overview, which I talk about the what is the weekly wrap up of the gold futures market. What are the exposure of the bullion banks, the fund managers, as well as the producers. So this help you to have an understanding of what makes the gold market ticks. And of course, ad hoc news of important events. For example, I will talk about uranium or copper or certain geopolitics. or important economic news such as the US debt situation or the geopolitics event where it will affect like the price of uranium, copper, or the price of oil, okay, especially in the resource sector. Yeah.
Okay, so yeah, this is what the sample looks like. Okay, yeah. Yeah, but for those that are still interested in annual analysis, I will be closing the special offer very soon. I will revise the price in November. Okay, so if you want, you can take advantage of this. Later on, I will drop the link, the form link, in this one, in the this one. So let's go through the summary. Okay, so I think in November, most of it will be leadership decision that will affect the future. There will be a lot of quite job displacement, and there could be advancement in technology, a breakthrough also. So over to you, PC, to make the summary from the Global
Yeah,
Trends research.
I believe that a lot of things would hinge on who is the next US president. Um, there are some, although chances are Trump will win, but you can never know what might happen. Okay, because a lot of people were saying that Trump won in 2020 as well. So another thing is that the US leadership no longer command the respect it did in the 20th century. So how is the new US president going to restore that preeminence of US diplomacy last century remains to be seen. And
Mm.
whatever they do, it will have a wide influence on geopolitics, economic, as well as finance. So there's a lot of confusion right now in the market, as I say, okay, because the market is behaving irrationally. Everything seems to be going up. US Treasury yield has gone up, gold is going up, US dollar is going up, stock market is going up. Okay, so all this doesn't have one that contravene with each other. So that goes to show that the market have its fair share of people that are both bullish and bearish. Okay, against certain resources or stocks and all those, but generally the bullish side overcomes the bearish side. So there will be more job losses in the horizon due to increase in bankruptcies and loss in job openings. In fact, the job openings have been trending down in the US. But the NFP will always save the day because they have their own interpretation how to manipulate the data. Okay, because the NFP takes every part-time job as one new job created, but one person can actually work a few part-time jobs. So that's how they double or triple count the number of employment. And that's why the MFP report is often unreliable. Okay, so for those who have followed me, I often say that if you want to have a true picture of the US employment, you should take out the part-timers. And that is when you have the U6 data. The U6 data will actually show that unemployment is much higher. And of course, the race for technology supremacy will unlock a lot of new technologies. I think that on the Chinese side, because of all the sanctions on DUVs as well as EUVs, I think some exciting prospects are around the corner. And I think that, and I believe that a lot of um, important research is now geared towards AI as well as quantum computing. So that's all I have.
Okay, yeah, thanks, PC. I think the form link is not correct, right?
That is the, let
That's the
me
one that I
get
sent
it.
to you.
Yes.
So long, the name? Sure not. Okay, never mind. Later on I will check again. Okay. So and let me stop sharing. I hope that you guys takes the action to become the member, join us, and I will okay, we are actually the only platform so far that I've known of. if you know of some other people that are doing this, then to let me know also. So we are the only one that doing both astrology and also global trends to ensure that high accuracy in our prediction. I think our members has already benefited a lot from the past 2-3 years. We already have a track records to shows that our this or else it will not go on and exist for so long. And then some of our members has joined us that since year 2022, 2023 till today. Okay, and thanks for the support of those existing members as well. Without you, there will not be us.
Yeah, I think a lot of it is due to uh, our members who keep the channel as well as the our channel alive, and also they are very active in Telegram. And
Mm,
by right, you should full use of the Telegram channel to ask questions, and we will always try our best to answer them.
yeah.
So yeah, that's how we also sometimes our members also post certain news, and that also
Mm,
help us to understand to have first-hand knowledge of what's happening. So it's a very active channel, and thank you so much for being supportive of that channel as well.
mm. Yeah, true. Our members also, we are like families actually. It's very good that they also contributed a lot. And our channel is actually very active on every day one. Almost every day we have things, to share, okay? And things that we can, talk about and things that we can discuss in the channels, which I think has greatly benefited a lot of people as well. Okay. So this is what is happening in our in our membership, in our tribes. We should call that, we are building our tribes, our community very much. That's why we also put it in a very affordable prices. Like if you go outside any investment courses, they will cost you, or even subscription membership. If you go out of here, it will cost you easily 4 figure. You go and check those that very good one. Okay. I know of. So some like Singaporeans that started it and all these things, and it could have easily cost you, I think, four figures at least. Okay. So we keep it, very affordable. We don't really, go and do like sponsored ads and all this for this one, because we also believe in affinity. If you have affinity with us, yeah, you are destined to really okay lah, this one talk a bit big. You are destined to really grow your portfolio, your investment. You will find us. Okay. So this is what we can say lor. Any words that PC you want to put in?
I think all through the years we have always tried to have a very balanced view, and I think sometimes I will post certain information on certain companies, and of course we have members who sometimes will question us. So that is how lively we can be, and then therefore we share uh, points of view of certain companies as well. Not only it's not fully one-sided, okay? So
Mm,
that's what make it interesting, because among our members, some of them have also been
knowledge.
very knowledgeable in
Mm.
in investment. Yeah, so we try to share knowledge as well in that regard.
Yeah, okay. Okay. For those that keen to join membership, it's okay. I will reach out to you. You have already registered for this webinar, right? This talk in the Zoom. I can I will send each of your emails with all the links to join as well. Okay. Then if you have any questions, you can ask me more. We are always very responsive. You can check with any of the members here that have we been very responsive in our, in your request in the email. Um, Members, can you help that? We always on the this one on the Telegram group to keep it really alive. Yeah. Okay. And also, yeah, and also our mission here is actually, to just share our passion. It's really our passion. We really love we love investment. I love investment, to be very true. And PC also the same thing. So we are sharing out our passion together. It's not so much of making money, because that that money is really very little for the this one. So however, we still need, to pay for the research, some of the data, some of the information, even some of the courses that I take. This is why we will need to charge a membership fees for all our members here. Okay. Yeah, thanks, Mitra. Yeah, Mitra has been, our long time member. She's joined since the pioneer batch. Thank you very much for your support. Okay.
So, shall we go to the Q&A?
Yeah. Okay, we have a few questions. I think starts from Mitra's question that, what is our take about India market, right? She asked your opinion on the Indian share market.
Yeah, I think right now, one of the thing is that the Indian stock market is like the entire, a huge bulk of it is owned by just a few families. Okay, so in that sense, it has gone up quite substantially. I think it's 3x according to the Bombay Stock Exchange Index. But right now, there has been some outflow of funds. I think in this 1 or 2 months, there are some suggestions that say that the funds are is exiting the Indian market to invest in China, but still have not seen substantial inflow into Chinese market as yet. I believe that most likely people are awaiting what the NPC meeting on 4th to 8th November will what kind of stimulus they will provide, and therefore we see we will then know people will be more certain, of investment in the Chinese market.
Yeah. Actually, Mitra has
Okay.
attended our period 9 course, so we will know that which market that you should go into. We have already talked about that. In fact, we are actually ahead of curve, compared to many, 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 investment guru. We are the first one that to talk about China market. Okay, to talk about Hong Kong market. Yeah, we are always like 1-2 years ahead of the curve one. Okay, so and today I just do a consult with a client, and she also observed. She says that you guys are really ahead. Like a lot of things, like we talk about, all this goal and all this are 2 years ago. Okay, so you have to be a bit patient. I talk about crypto also 2 years ago when it was very down. And now our members also know what to do with the cryptos, because I can roughly predict the trends of the cryptos as well, and give you an indication. Okay, so this is what the members are benefiting from. Yeah, then we have questions on. Okay.
I think there is a question on the LEI.
Oh yeah, this one you want to answer, I think from Stephen Fu, our
Yes.
audience.
Yeah. Now the LEI is not really a foolproof prediction, but it is something that is worthwhile to monitor, to at least to prepare yourself for some upcoming risks. The accurate prediction are often the inversion of the 10-year to 2-year yield. Okay, so where currently they are still around 0 to negative. If let's say the 10-year to 10 to 2-year yield inversion returns back to positive, then that is a higher chance that a recession is around the corner. The other is the sham rule, okay, that is based on a chart that shows the upcycle of unemployment from a low base. The moment that it breaks above, breaks up above certain level, then that is a clear indication that there is a recession. But I believe that the recession is already in. It's just that a lot of money are going into the stock market because the US government is the enabler of all the speculation, okay, because of the huge debt that is thrown into the economy. But if we look at it, the housing is already in crisis. The commercial real estate is already in crisis. The banks are losing a lot of money. Now, these are very synonymous with a recession. But the thing is that, through the media, through debt, and through the financialization of asset, they are trying to prop up the stock market. That's my personal belief. Okay.
Mm. Okay, yeah. Another question, I think from KH, he is also our member. Based on the
Yeah.
last 5 to 10 years, it seems that China's GDP and economy do not really reflect in China's share market, CSI 300. How true is it? What are the reasons and what are your thoughts on this?
I believe that up to a certain point in time, the Chinese government does not care about the stock market. You
Mm.
can see that a lot of their policy are driven to improving the public infrastructure, improving the life of the people, with very little attention being paid to the stock market. And to such a degree that when the Chinese childbirth started falling, they discovered a host of reasons why. First and foremost was because of the expensive housing. Second was because the cost of higher education, the cost of tuition, private tuition, and also because of the expenses that the parents need to put on the kids. For example, computer games. So what happened was, all these are actually, the Chinese government often reacts to certain findings. So what they did in 2021 or preceding 2021, they already imploded the private education system. So what they did was they mentioned that the curriculum that the private tuition centers use are actually free for public schools. So why are they using free education to charge? And therefore, they impose that they should not use the school curriculum for their private tuition. So that caused the private tuition companies to collapse. Okay, their share price collapsed from 80 to 90%. And that is the first impact on investors' sentiment. The other thing was the Alibaba debacle, where Ant Financial was prevented from listing. Now, it also has its reason, because apparently Ant Financial was offering loans and offering a lot of products that is not subject to the PBOC regulations. So what Ant Financial did was creating a lot of young indebtedness to the by showering them with more gifts and more cash back, the more debt that they take. So China sees this as a problem, and therefore they prevented Ant Financial from listing, and that was a second hit on the investors' sentiment. Now, the last straw came in 2021 when they specifically burst the real estate market, simply because when home prices are too expensive, they are preventing young people from starting a family. And if it prevents them from starting a family, therefore it affects the demographic. So China decided to prick the real estate bubble. And when a lot of the developers were in trouble, especially Evergrande, the Chinese government did not rescue it like what the Fed did during the 2008 financial crisis. The Fed bailed out a lot of banks, okay? But China decided to let Evergrande die. So a lot of the investors that have vested interest in Alibaba and Evergrande are actually foreign financial firms. And therefore, China said that they should not bail them out. And that was a third hit on investors' sentiment. But as China moved forward, then we have a lot of those anti-Chinese technology companies policy by the Biden admin. So a lot of them got sanctioned. They were restricted from having access to semiconductor making equipment. Some of them are banned from specific markets. So then I believe that it finally dawned on the Chinese government that they cannot continue to incur debt to finance a lot of companies. Okay, they need capital to come in. So that is why I believe that there is a change right now within the government, that private sector needs funding, not from the government, but from investors who wants to invest in a company because they are good companies. So I think there is a gradual change right now. And I believe that the coming year, you will see that a lot of policies will be geared towards helping investors, provide the platform for investors to invest in Chinese companies, and the government would sit back a bit and let the investors be the one that question the company and not the government, because they need that kind of capital to come in order to boost Chinese technology investment. So that's my opinion.
Yeah. So okay, in next year's, I think period 9 course, when we open for registration, I will also include some studies of those China company that really have big potentials into the period 9 course next year. So we are going to put a little bit of revision as well. Those that attended before, we will give also special rates. Okay. So these are the potentials that we've seen in the upcoming years.